Have you ever wondered how and when the Indian stock market came into existence? Well, let's dive into the past and explore the genesis of the Indian stock market, which began its journey in the 19th century. The year was 1875, a time when the Indian economy was taking its baby steps towards growth and development. It was during this period that the Bombay Stock Exchange, or BSE as it's commonly known, was formed. This was a significant milestone not just for India but for Asia as a whole, because the BSE was the first stock exchange on this continent. Now, you might be imagining a grand building filled with buzzing traders from the get-go. But that's far from the truth. The early years of trading were rather humble, taking place under the broad shade of a banyan tree in the heart of Bombay, now known as Mumbai. Yes, you heard that right. The foundation of what is now a multi-trillion-dollar market was laid under a tree. This modest setup was more than enough for the handful of brokers who would gather there, exchanging shares of companies and laying the groundwork for a future financial powerhouse. As the years passed and the number of traders grew, it became essential to move this open-air trading floor indoors. A designated building was set up, marking a new chapter in the history of the Bombay Stock Exchange. This was not just a physical move but a symbolic one. It represented the maturing of the Indian stock market, its transition from a casual gathering under a tree to a structured, organized institution. The BSE soon became the heart of the Indian financial system, pumping life into the country's economic veins. It stood as a testament to the potential of the Indian economy, encouraging businesses to grow and investors to invest. Thus, the roots of the Indian stock market trace back to the bustling streets of Bombay, now Mumbai, in the late 19th century. And as we'll see in the next scenes, these roots have grown into a robust tree, branching out in numerous directions, shaping the economic landscape of India as we know it today. The journey of the Indian stock market, however, was not a smooth one. It evolved and expanded over time, reflecting the economic and political shifts of the country. The 90s marked a significant turning point with the establishment of the National Stock Exchange, or NSE, in 1992. This was a game changer, introducing electronic trading and effectively modernizing the Indian stock market. No longer were transactions solely face-to-face, but they could now be conducted on a digital platform, increasing efficiency and transparency. The same decade also saw India opening its doors to economic liberalization. The government loosened its grip on the economy, allowing the private sector more room to grow. This had a transformative effect on the stock market landscape. Foreign investments flowed in, businesses flourished, and the stock market became a barometer for the country's economic health. But the journey was not without its bumps. The early 2000s witnessed the introduction of derivatives trading, adding another layer of complexity to the market. This new financial instrument brought with it both opportunities and risks, and was a litmus test for the market's ability to adapt and innovate. Then came the 2008 global financial crisis. Like markets around the world, the Indian stock market was hit hard, but it was also a test of resilience. The market took a hit, but it didn't collapse. It weathered the storm, learned from it, and came out stronger. In the years that followed, the market continued to evolve, reflecting changes in the economy and the world at large. New sectors emerged, technology continued to revolutionize trading, and the market became more accessible to the average Indian. Through ups and downs, the Indian stock market matured and diversified, becoming an integral part of the country's economic fabric. It's a testament to the resilience and dynamism of the Indian economy, and a fascinating story of evolution and expansion. From its humble beginnings, where has the Indian stock market reached today? Let's dive in. Today's Indian stock market is a vibrant ecosystem, bustling with activity. It's a whole different world from its inception in 1875. The market today is characterized by its size, liquidity, and diversity. The Bombay Stock Exchange, one of the oldest in Asia, now boasts over 5,000 listed companies, making it one of the largest in the world in terms of listed entities. The National Stock Exchange, a more recent entrant, has also made its mark. With its emphasis on technology and innovation, it has brought about unprecedented transparency and efficiency to the Indian capital market. The market's liquidity too has seen exponential growth. Daily trading volumes often cross billions of dollars, indicating the level of investor confidence and market maturity. Diversity is another hallmark of the Indian stock market. It's not just about a few sectors anymore. From technology to pharmaceuticals, from real estate to renewable energy, the market encompasses a wide array of sectors, reflecting the diversity of the Indian economy itself. However, this vibrant market would not have been possible without the regulatory bodies that oversee it. The Securities and Exchange Board of India, or SEBI, plays a pivotal role in managing the market and protecting investor interests. With its robust regulatory framework, SEBI ensures transparency, fairness, and investor confidence. The Indian stock market has also seen an increasing participation of retail investors. The growth of mutual funds in particular has democratized investing. No longer is the market the playground of a select few. Today, even the common man can participate in the country's growth story through mutual funds. In conclusion, the Indian stock market of today is a far cry from its early days. It stands as a testament to the country's economic resilience and growth potential. It's a symbol of how far we've come and an indication of the journey still ahead. Today, the Indian stock market stands as a testament to the country's economic resilience and growth potential.